Japanese equities, led by the Nikkei 225 index, has performed very well year to date and also during 2023. It's our view that macroeconomic fundamentals with the prospects of inflation and real wage growth has been one key determining factor. And then of course the capital management reforms and the corporate governance reforms has also been a very important leading factor for return on equity to improve. And then of course there's a third factor, geopolitical considerations, that has made Japan a very attractive market for global investors. On the other hand, we think that an overlooked market is the small to mid-sized section of the market. This part we think has even more opportunities for a good sustainable re-rating thanks to the lower valuations, good earnings growth potential, and good payout potential for shareholder returns. Some of the progressive companies that we're speaking to and engaging are really eager to re-rate going forward, and we see a lot of good investment opportunities on that front. Industrials. At the end of the day, we think that some of these companies within these industries have great market positions globally, 30, 40, 50, 60% dominant market shares. It means they have pricing power, it means they have also the ability to secure good margins even in an inflationary environment. But also some sectors like financials have seen really good potential for companies to do something about their capital mismanagement. And to do so, they need the help of investors like us to help them navigate. So we've been working very carefully with some of our investment holdings in the financial sector. And they've seen some really good returns in 2023, and we anticipate some more returns to come in 2024 as they look to unlock value by addressing some of the capital mismanagement issues. Currently, the Japanese economy is at a really interesting point where they're seeing green shoots of inflation and real wage growth for the first time in more than 30 years. As a result, as you know, the Bank of Japan is currently considering to normalize monetary policy. It's our view that the Bank of Japan will likely do so, but at a measured approach. Start with yield curve control, then move from negative interest rate to zero and maybe positive interest rates. But we think this will happen in a very gradual approach, nowhere near the same sort of speed at which the US Federal Reserve and the ECB have moved on their interest rates. So as a result, we think that the yen will likely appreciate, but at a measured approach. And as a result, we think that for many businesses that we're invested in, they'll be able to see good profit growth even in an environment where the yen would appreciate, because it's a manageable situation from their standpoint.